Joining me now is Potomac Wealth Advisors founder and president, Mark Avallone. Mark, good to see you. A minute ago, Mike Lee said this market is going to continue to rip. Your thoughts? How do you see markets?
Well, I think I see it the same way. There's, of course, concern and some reluctance when you don't have the matters in Iran settled. But when you look at the massive cash flow that big tech continues to generate, the positive earnings reports in a broad economy, and you see the unemployment rate steadying and wage growth strong, American manufacturing returning, Intel's resurgence indicates that there are a lot of positives. And I think if you just focus on the what-if negative outcomes, you're missing this rally. It's difficult to invest at all-time highs, and it's difficult to invest when there's uncertainty in the Middle East, of all places. But I think you have to look at earnings, follow the cash flow, follow what big tech companies are doing, how confident they are, what the demand is, and stay on the side of long-term bullish investor.
Well, we saw very strong earnings from big tech a couple of weeks ago, and now you've got deal making on top of that around AI. That's accelerating. NVIDIA striking a $500 million deal with fiber optic maker Corning to expand U.S. fiber production for AI data centers, creating more than 3,000 jobs there in the U.S. New manufacturing sites planned in North Carolina and Texas. There's Anthropic inking a computing deal with SpaceX, giving it access to more than 300 megawatts of data center power to support growing demand for Claude, the AI platform.
This is not just going to benefit tech, and tech-enabled companies, the companies that use the technology, are definitely going to benefit. But you're also looking at the industrial complex, the development companies, the construction companies. These are mini cities that are being built, and they're also revitalizing areas that have been underserved. So the far-reaching effect of this tech build-out is not just narrow with mega-cap tech and the direct buyers of the technology that they're selling. So that is the underpinning of this broader expansion of the market. And right now, software seems to be getting hammered. It might be overdone, but other than software, every area of technology, a rising tide is raising all boats. The NASDAQ movement reflects that, and that's why we have our bullish posture towards stock investing.
So is that where you want to allocate capital, Mark, in terms of AI names? You want to stick with growth? What are some smart investment strategies our viewers should consider to best position the portfolio today?
Well, we've always been growth-biased investors. We've talked about technology a lot on the show. That is one, and that's another area that can withstand if inflation doesn't recede. You know, inflation's been poking around 3% now, and one way to fight inflation is with growth and companies that'll benefit and who can pass along the pricing power and not get beat up by the underlying costs that the inflation is causing their operating margins to be hit by. So we want to look at strong sectors with top-line growth and pricing power, and that brings us back to technology. Technology also lowers the cost for corporations who are fighting other higher input costs like energy. So they're leaning on becoming more efficient and using these enabling technologies to improve their operating profit margins and their bottom lines. So that's why everything to us seems to always go back to tech. Careful about too much of an overweight, but that's where we want to be for our diversified clients.
All right, Mark, we'll be watching all that. Thanks so much, Mark Avallone. Stay with us. Quick break, and we'll be right back.